All right, guys, let's get this started.
Recording in progress.
What's going on, guys? So today is FOMC. Okay, so this is what we all been waiting for. So this is just like giving us a bias. Obviously, we just have to be patient. Patience is going to be extremely important for this event. Okay, because there's going to be a lot of eyes focusing on what's going to happen, and moves can be extremely volatile. Okay, so I don't want you guys to take unnecessary losses if you don't have to. If you're confused, again, if it's too much for you, if you're confused, educating yourself is what's more important, so you can start learning how these events impact the market so you can take advantage of it next time. Okay, because the markets ain't going to go nowhere. So you just have to understand that markets is going to be here forever, but we do get these events once in a while, right? So every single time you get this event, something is going to happen. You gain more knowledge, but don't use this as an opportunity to blow your account if you don't know what to do. Okay, use this more as an educational tool, and use proper risk management. All right, so we have to wait for confirms before we start taking any trades. All right, guys. So just to give you guys the understanding so far, markets is already expecting a 25 basis point cut for this meeting. So it's already priced in. So normally what that means is the fact that it's expected, if it comes out at 25 basis points, we might not see a reaction, and we probably would because of the algorithms. But majority of the time, if it is expected, there's just a higher probability that it will not give us an immediate reaction right away. So the things that we do have to focus on, right, is the outlook of the Federal Reserve, like their statements, Jerome Powell's press conference. Usually when the reporters are giving him the Q&As, that's where he tends to give us some sort of hints on what the expectations we should follow, for the rest of the year. That's what gives us an edge during these press conferences, these rate decisions. Also today, we do have the dot plot. So that's going to be majority of the focus, where we can see a lot of volume in the markets following the dot plot. But there's a lot of caveats that we do have to pay attention to, because we have to make sure that everything is one-sided. Because if it's not, we're going to see mixed, choppy price action. That's going to really hurt a lot of accounts, because it's a possibility we could see that, like, it could be a 25 basis point cut. Then we could see the dot plot that shows less rate cuts. And then Jerome Powell could be dovish. We could see that type of mixture in the markets. So we have to be certain and have to be sure that we're going to get a one-sided direction. Yeah, good job, Anthony. You still in it? Hell yeah. Good job, bro. All right, so what to expect, right? So as the 25 basis cut is expected, we're going to focus on a dot plot. But if we are looking for a hawkish bias, okay, so what we want to see, ability. Okay, so a hawkish reaction, if we get the statement like this, we're going to be expecting equity markets, like the stock markets, is going to go down. We're going to see the yields and the dollar gain strength. If you are taking gold, gold will also push lower too on a hawkish bias. All right, guys, makes sense? Put a 1 for that, if that makes sense. Uh, yeah, hawkish reaction, gold will go down. Yeah. Okay, so now let's move towards the dovish bias. So NZD USD is just going to do the op, like if I say stronger dollar, NZD USD will go lower. Okay. So dovish bias. So what we're going to be expecting is him to talk about inflation is easing. If we could see that in a statement, if we could see that the labor markets is showing soft spots, easing in the labor markets, if we could get more expectations on more rate cuts, right? Rate cuts heading to 2% a lot faster than anticipated. If we could see more of, like, if he talks about the data is showing we should be more dovish, right? Anything like that leaning towards more rate cuts, weaker growth, lower inflation, okay? That's what's going to lead more towards a dovish reaction. If we get that, we're going to see the stock market is most likely going to rise off of this. And we're going to see that the dollar and the yields is going to push lower, and gold would also rise because of weaker dollar and weaker yields. Okay, guys? Makes sense? So it's going to be a lot of wordplay, and we're going to have to focus on the dot plot. That's what's going to be the majority of the focus, is the dot plot, and also Jerome Powell's comments. Okay. So just like a caveat now, just in case, like, there's any, we have to be prepared for any possibilities. What's up, Lex? If there's chances, I think it was like a 3-4% chance of a 50 basis point cut, right? Possibility. If he does surprise us with that, automatic reactions, like automatically weaker dollar, stronger equities, stronger gold. It's going to be extremely, extremely volatile. Okay. Because it's a surprise. There's also a possibility that, what if he pauses rates? We see that there is a no change. Okay. If he doesn't pause rates, if he does pause rates, there's going to be an automatic reaction. We're going to see the dollar is going to gain strength. Gold and equities is going to drop immediately. It is a possibility. We have to see it. Yeah, very unlikely, but there are possibilities for those surprises. We don't know. Okay. So just in case, if that does happen by surprise, at least you get to see those reactions. If those things do pop up, at least you can understand how to take advantage of it. Now, there is a possibility, if he does a 25 basis point cut, the dot plot could still show less rate cuts in the future, right? Which could cause a hawkish reaction. So even though there is a cut, the dot plot could actually give us a hawkish reaction, right? And then when Jerome Powell speaks, he is 50-50. He could either follow the dot plot and explain why they're expecting less rate cuts, but if he comes out and confirms more rate cuts, we could see a lot of choppy price action. Okay. So just to give you guys just those scenarios that is likely to happen. Okay. So if it does, you could be able to anticipate it. So talking about the dot plot, it's going to look like this. All right. So you're going to see these dots. So you want to compare this to the new one pretty much, but with our calendar, it gives us the number. So it makes it a lot easier. So when you're trading live with me for the event, you're going to see that it's color coordinated. It's either red, lower numbers, or it's going to be green. So we don't have to worry about this, right? But this is just to show you the dot plot. And I did it in a YouTube video for you guys already. Hopefully you guys went over it. But when you see the majority of dots, that kind of shows you where rates are expected to go by the end of the year. Okay. So they tell us this all beforehand, but things could change because economic data could change, right? So maybe these dots will end up being lower in the future because we've been seeing weakness in the labor markets. Okay. So that's a possibility too, right? So just to give you an idea, if these numbers are higher, that's showing less rate cuts. So that will be the hawkish reaction. Okay. So you guys could get that understanding. And pretty much this is what it's going to look like, where you can see the projection from the first year, second year, longer, and third year. So this is the numbers, right, of where the rates should be, right, by next year, the year after that. So if the numbers are higher, right, that shows us less rate cuts. That's going to be hawkish. If these numbers are lower, that shows more rate cuts heading to that 2% goal. So this is what's going to be the focus on top of, looking at the target. So just so you guys understand, when you're looking at the data that it comes out, we need to pay attention to this first. We want to make sure they cut rates by 25 basis points. If they do a 50, right, we already understand that's the reaction. That's going to be a no-brainer. If rates are the same, we understand that's going to be a reaction. If it comes out to 4.1%, 4.2, right, that is the 25 basis point cut, right? So that's what we have to focus on first is the rate. Then after that, focus on the projections. Then after is the forward guidance. But usually this is going to be the focus. And then 30 minutes from then, we're going to focus on Jerome Powell's meeting. Okay, so that's the structure you guys should have for looking at this rate decision. Okay, guys, any questions? Group, you guys are good. One in the chat if you're good. If you have questions, now is a good time to ask. Great explanation. All right, thanks, Anthony. Glad it's good. All right, 1-1, good. Okay, cool. All right, so now is a waiting game. All right, guys. The dot plot stuff now. Grab. Thanks on the dot plot stuff. I know. Grab what it is. Yeah. So the dot plot, all it is just expectations are on where they expect interest rates to go. The central bank members. The news is at 2:00. All right, guys. Now we wait. Now the trade ideas. All right, guys. So I'm gonna end the YouTube. If you guys want to trade live with us, go on my bio to join the private group. Okay. So you got 10 minutes for the rate decision, and then at 2:30, Jerome Powell is gonna speak. Okay, guys. So hopefully this was helpful. Remember, use proper risk management. It's gonna probably be a lot